Have you ever wondered how everyone, governments, corporations, small businesses, families, can all be in debt at the same time and for such astronomical amounts? Have you ever questioned how there can be that much money out there to lend?
The Federal Reserve really, even though it is not part of the federal government, it is more powerful than the federal government. It's more powerful than the President, the Congress, and the courts. Now, a lot of people challenge me on that, but let me prove my case. The Federal Reserve determines what the average person's car payment is going to be, what their house payment is going to be, and whether they have a job or not. And I submit to you that that's total control.
The Federal Reserve is a private corporation. It is about as Federal Express. It makes its own policies and is under virtually no regulation by the U.S. government.
There's nothing federal about the Federal Reserve, and there are no reserves. In most cities, it is not listed in the blue government pages. It is listed in the business white pages right next to Federal Express, another private company. But more directly, U.S. courts have ruled time and time again that the Fed is a private corporation. Though the Federal Reserve is now the most powerful central bank in the world, it was not the first. In 1913, Congress gave an independent central bank, deceptively named the Federal Reserve, a monopoly over issuing America's money. And the debt generated by this quasi-private corporation is what is killing the American economy.
So what is a central bank? A central bank is an institution that produces the currency of an entire nation. Based on historical precedent, two specific powers are inherent in central banking practice: the control of interest rates and the control of the money supply, or inflation. The central bank does not simply supply a government's economy with money, it loans it to them at interest. Then, through the use of increasing and decreasing the supply of money, the central bank regulates the value of the currency being issued. It is critical to understand that the entire structure of this system can only produce one thing in the long run: debt. For in our financial system, money is debt. And debt is money. Here is a chart of the U.S. money supply from 1950 to 2006. Here is a chart of the U.S. national debt for the same period. How interesting it is that the trends are virtually the same. For the more money there is, the more debt there is. The more debt there is, the more money there is. Where does the money to pay for the debt come from? It can only come from the central bank again, which means the central bank has to perpetually increase its money supply to temporarily cover the outstanding debt created, which in turn, since that new money is loaned out at interest as well, creates even more debt. The end result of this system without fail is slavery, for it is impossible for the government and thus the public to ever come out of the self-generating debt.
Most of us believe that banks lend out money that has been entrusted to them by depositors. Easy to picture, but not the truth. In fact, banks create the money they loan, not from the bank's own earnings, not from the money deposited, but directly from the borrower's promise to repay. The borrower's signature on the loan papers is an obligation to pay the bank the amount of the loan plus interest, or lose the house, the car, whatever asset was pledged as collateral. That's a big commitment from the borrower. What does the same signature require of the bank? The bank gets to conjure into existence the amount of the loan and just write it into the borrower's account. Sound far-fetched? Surely that can't be true. But it is. Money is literally created as debt. New money is created whenever anyone takes a loan from the bank. Governments place an additional statutory limit on the creation of new money by enforcing rules known as fractional reserve requirements.
This practice of loaning out more money than there are reserves is known as fractional reserve banking. Every bank in the United States is allowed to loan out at least 10 times more money than they actually have, then charge interest on it. If you or I were to do that, we would be charged with fraud, a felony. Fractional reserve lending is rooted in a fraud, results in widespread poverty, and reduces the value of everyone else's money.
Now that we understand how money is created by this fractional reserve banking system, a logical yet elusive question might come to mind. What is actually giving this newly created money value? The answer? The money that already exists. The new money essentially steals value from the existing money supply. For the total pool of money is being increased irrespective to demand for goods and services. And as supply and demand finds equilibrium, prices rise, diminishing the purchasing power of each individual dollar. This is generally referred to as inflation, and inflation is essentially a hidden tax on the public. $1 in 1913 required $21.60 in 2007 to match value. That is a 96% devaluation since the Federal Reserve came into existence.
What is the advice that you generally get? And that is inflate the currency. They don't say debase the currency. They don't say devalue the currency. They don't say cheat the people who are saved. They say lower the interest rates. The real deception is when we distort the value of money. When we create money out of thin air, we have no savings, yet there's so-called capital. So my question boils down to this: how in the world can we expect to solve the problems of inflation, that is, the increase in the supply of money, with more inflation?
Isn't it astounding that despite the incredible wealth of resources, innovation, and productivity that surrounds us, almost all of us, from governments to companies to individuals, are heavily in debt to bankers? How can that be? How can it be that the people who actually produce all the real wealth in the world are in debt to those who merely lend out the money that represents the wealth? Even more amazing is that once we realize that money really is debt, we realize that if there was no debt, there'd be no money.
For remember, the only way the money can come into existence is from loans. Therefore, if everyone in the country were able to pay off all debts, including the government, there would not be $1 in circulation. When a person borrows money from a bank, it almost always has to be paid back with accrued interest. In other words, almost every single dollar that exists must be eventually returned to a bank with interest paid as well. But if all money is borrowed from the central bank and is expanded by commercial banks through loans, only what would be referred to as the principal is being created in the money supply. So then, where is the money to cover all of the interest that is charged? Nowhere. It doesn't exist. The ramifications of this are staggering, for the amount of money owed back to the banks will always exceed the amount of money that is available in circulation. This is why inflation is a constant in the economy, for new money is always needed to help cover the perpetual deficit built into the system, caused by the need to pay the interest. What this also means is that mathematically, defaults and bankruptcy are literally built into the system.
The big problem here is that for long-term loans, such as mortgages and government debt, the total interest far exceeds the principal. So unless a lot of extra money is created to pay the interest, It means a very high proportion of foreclosures and a non-functioning economy.
And there will always be poor pockets of society that get the short end of the stick. An analogy would be a game of musical chairs, for once the music stops, somebody is left out to dry.
And where does this leave us? We are hostages in an economy that must grow faster and faster to keep up with an ever-growing money supply, where the entire system collapses in ruin. The money system as currently structured refuses to recognize that the real economy is limited by the capacity of the planet to provide the raw materials and waste disposal services the economy needs. The planet is finite, and therefore it should be obvious that the economy cannot grow at an accelerating pace forever. But there are unprecedented challenges before us. No longer can exponential growth allow us to sustain a monumental debt that must ever increase to prevent the house of cards collapse of the whole system. But the solutions are there to see too, if we look.
That succinct statement of Jefferson is, in fact, the solution to all our economic problems today. It bears repeating. The issuing power should be taken from the banks and restored to the people to whom it properly belongs. Issuing our own money is not a radical solution. I want to stress that. It's the same solution used at different points in U.S. history by men like Benjamin Franklin, Thomas Jefferson, Andrew Jackson, Martin Van Buren, and Abraham Lincoln.
The privilege of creating and issuing money is not only the supreme prerogative of government, but it is the government's greatest creative opportunity. By the adoption of these principles, the taxpayers will be saved immense sums of interest. Money will cease to be master and become the servant of humanity.
But it's been used at different times throughout Europe as well. Perhaps the best example is one of the small islands off the coast of France in the English Channel. Called Guernsey, it's been using debt-free money issues to pay for large building projects for nearly 200 years. But here's the ingenious solution to keep the money supply stable and avoid inflation and deflation while the debt is retired. There would be no further creation or contraction of money by banks. Monetary power can be transferred back to the Treasury Department.
Money could simply be created and spent into the economy by the government, preferably on long-lasting infrastructure that facilitates the economy, such as roads, railroads, bridges, harbors, and public markets. This money would not be created as debt. It would be created as value, that value being in the form of whatever it was spent on. If this new money facilitated a proportional increase in trade requiring its use, it would cause no inflation whatsoever. And most of that debt-free money would enter the economy as wages, circulating through all levels of society for everyone's benefit. This kind of abundant money would fund a reinvigorated, productive economy in which the savings of the people could fund honest loans of real existing money. But what can you do right now? Well, right now there are people and organizations around the world that understand the problems and the injustice of today's monetary system, and you can join them in their effort to bring about the fundamental changes we need.
What's the solution? First of all, education. That's what this video presentation is all about. But secondly, we must act. We must take back the power to issue our own money.